folks. Welcome back to Finance Fridays. I'm your host, Lucas Balahood with Coldwell Banker RMR and the Balahood Group. I'm joined again today by my lovely friend and colleague here, Alexandra Job with RBC. Alex, how are you doing this week?
Good, good. How are you?
I can't complain. It's a bit of a dreary day out here, late
Sad hair day.
October, mid-October day. You know, what you gonna do? But of course, thinking of all of our I was going to say friends, colleagues, that kind of thing, but that's just natural. But thinking about our friends in the East Coast and down in Florida there, who've obviously had a rough go here the last couple of weeks with the hurricanes, and we hope everybody's doing okay.
Mhm.
Certainly with everything going on there, but otherwise, it's been an interesting start to the fall. September was a bit of a slower month for real estate here in Durham region, but there's still lots going on else out there with hockey season, football season. I'm a big sports guy, so I'm really happy to get back in front of the
Your
TV and
time.
enjoy those things again. I mean, the Blue Jays had a bit of a troubling weekend there over Thanksgiving,
That was
but again, there's so much to be thankful for. Heck, I almost forgot about that as well. But lots happening outside of the work world too.
for sure.
Now, yeah. So Alex, today I just want to check in because it's been a little bit now. It feels like it's been a while since we last recorded.
Right.
But what's been going on at RBC and what's the outlook from the Bank of Canada this month?
Yeah, I know you're going to look back on that September numbers because we have the data, so I'm excited to hear. Always a little bit shocked and intrigued as to what's going on. But in regards to banking and interest rates, our last change with rates was near the end of September. Like our contract rates changed a little bit. We saw some increase in the shorter terms. I'm seeing clients have a little more interest in shorter term fixed rates versus the variable or long term. And that's just kind of a trend right now, where clients are thinking maybe locking into a 5 years a little too long. So I'm seeing interest in those 1, 2, and 3 year terms, which isn't as normal, right? Usually my clients are going for the 4 and the 5 year fixed. So we are going to have another announcement from Bank of Canada on October 26th, so coming up very soon. And we unfortunately are expecting that they're going to raise the overnight rate, which would then affect our prime lending rate at the bank. Talk is that it will be 75 basis points, so we could see our prime rate go from the 5.45 that it's at right now up to the 6% and or over 6%. So we'll see how that plays out. And I think on our next call, we'll be able to touch on that.
Yeah, so right now, so just to reflect for a moment, folks are qualifying at the contract rate plus 2% with their lender.
Right? Yeah.
So if we're somewhere in the mid fives right now, you're qualifying at 7.5%. If that
Yeah.
overnight rate gets close to 6, we're going to be qualifying in the 8% range.
If the prime rate goes up to 6, prime.
Right, right,
Yeah.
right. That's right, because it's got to get back to you guys.
Mhm.
So, so obviously that's going to have an impact on the market and interest rates as an indicator are a bit lagging in terms of the impact that they're going to have on values. It's going to take a couple of months for that change to take hold.
Right, because of the
So could
sales
be the
that,
spring when these come back.
yeah, because the sales that happen and the prices that landed in your last quarter there in July and August and September, those buyers were qualified at the lower interest rate, but we have seen that upward trend of pricing or cost of borrowing since then. So it does take some time to roll over and change. Now, Luke, I know you had some stats about volume and units, kind of that year over year. Do you want to touch on that and just let our
Well,
viewers know?
yeah, absolutely. I mean, this is kind of interesting, and it's a bit of a sticker shock for me when I just was
Mhm.
redoing it here earlier in the week because the Bank of Canada's raising rates to slow inflation and slow consumer spending, right? And we
Yeah.
talk about that all the time. So, is it really working, or are we just hitting people's pocketbooks? And that's really all that they're seeing is the cost of living going up. But I was looking at both the number of sales and dollar volumes
Mhm.
in compared from September this year compared to September last year, as well as the year to date numbers for both of those. And we had 662 sales in September this year. We had over 1,000 last September. And in terms of dollar volume on a monthly basis, we were at $973 million of inventory was sold
Mhm.
last September, and we're at just over 600 million this September.
Wow, yeah,
So
big
that's
change.
a 30% drop right
Yeah,
there.
yeah,
Year to date this year, we're at 8,300 transactions through the end of September. Same time period last year, there was over 12,000 sales. And from a dollar perspective, this is where I got was the sticker shock for me. So through last September, we were at over $10.9 billion worth of property sold.
yeah,
This year we're at 8.7 billion.
yeah. So that was that like
So
on fire market last year, and now we're cooling, right? Right terminology.
mhm.
Everything's cooling a little.
Yeah, yeah, certainly there's been a cooling period. You know, a lot of this talk in the media is how the market has completely crashed. I mean, that's not the case. Our average price is at $915,000. Compared to September of last year, that's only a pullback of 5.4% on the price side of things.
Yeah.
But we've seen a fewer transactions take place. That's a big one. There was as I said, 662 this past month. We're a little over 800 in August. So, there is a trend in terms of there's less spending happening, which is what the
Yeah.
government wants. So, as the outlook we've, referred to a little bit in some past video has been, if the rates are going to rise or continue to rise a little bit as we head into 2023, and the outlook on the optimistic side of things is by the end of 2023, we'll see rates start to come down again,
Yeah, that's
which will have a positive impact on pricing.
and I think when people hear that, that's why we're getting clients that are more interested in shorter term because, why lock in for 5? I mean, there are advantages of locking in at 5 if you just want that security and you don't want to talk about interest rates for 5 years and you can port your mortgage with you, right? But I do feel like that's why there is interest in those 2 or 3 year terms right now because if rates are going to come back down, you want to take advantage of the lower option, right?
Yeah, exactly, exactly. And it's funny because it's not funny. It's unfortunate that because affordability has increased over the last 6, 8 months here, there's a number of people that have been pushed out of the buying market into the rental market.
Yes.
But the rental market is getting very
So
competitive again.
oh, so competitive. I know a client that was, or a friend that was looking for a rental, and it was in like it was one of those like a multiple offer situation where they're running up against competition just to rent the house. And I didn't really know that that market gets like that. And rental right now, if you can't buy, you're left to live with family or rent. And so there's a huge demand for rent. I mean, if you're an investor, I think that's a great thing. I mean, if you've got a turnover of tenants, you can increase your rental. But what is the average rent right now?
Well, I was looking at that in Durham region for a one bedroom unit. It's from September. It looks like that's averaging around $2,200 for a one bedroom
For a one
apartment.
bedroom. Wow.
Yeah, a two bedrooms around 25
Wow.
$100 a month. So
Yeah.
those costs have certainly gone up for people, and compared to what they would have qualified for on the mortgage side of things, and that affordability difference there, it's unfortunate because the competition is also just like it did to the resale market in the last 2 years. The added competition and demand for those properties raised the prices up,
Mhm.
and that's going to be a challenge for people. Year over year, the average rent has increased between 15 and 25%, depending on the type of unit that you're looking for.
Yeah.
So that's a big change.
Yeah.
And and yes, on the investor's side, it's wonderful because you've got that demand, and you're able to obtain those rents. But on the consumer side, it's certainly a little stressful for
Yeah.
folks that way. But it's just that added competition and sort of going through that cycle. So that hopefully will come down as the calendar turns over next year. But that's what it looks like right now for people in the rental market.
Well, with all of that being said, I have to like sum it up as how important it is to be working with a real estate agent like yourself that's so knowledgeable in, the market and the trends and the pricing and where things are when it comes to listing for, your house for sale or to purchase and enter the market or invest as well. I just think you're a wealth of knowledge and so informed. So thank you so much for sharing all that.
No, no, that's part of our job here, Alex, is to make
I
sure that
know, but
you're
you're good at
informed
it.
and understand. because I don't make the decisions. I just want to make sure that people have the right information in order
Informed.
to make an
Yeah.
informed decision.
Informed
And it
decision.
doesn't matter the type of property you're looking for, if you're renting, if you're buying, maybe you're investing in a commercial property, whatever it ha you know, what have you for your business or
Mm.
whatnot. Every situation is different, and we've got to tailor everything to the individual and their needs and advocate for those. So, those are our responsibilities. That's our job, and we're here to help solve problems, but have fun while we're doing it. You know what I
Yes,
mean?
you're good at it.
Yeah, so that's where we're at now, at least in terms of the market in Durham region. Homes are taking longer to sell, which is a beneficial thing for the buyer because they have a chance to go and complete that really
Mhm.
important due diligence.
Yeah.
Financing obviously is important. We saw, multiple offers like crazy last year, and everything was sort of selling to the highest bidder,
Yes.
in a firm situation, and now people can go get their inspection done. You get that financing clause in there, which is super important. We're
Yep.
seeing,
For the
different,
appraisals.
yeah, we're seeing different conditions in place, whether it's a sale of a purchaser's property or what have you. We're seeing those conditional deals there now, which is very important on the consumer side. You want to make sure you know what you're buying and that everything checks out. So
Yeah, I
when you're
think
going in blind, it's risky.
your clients that you have that are listing their house, it's so important to know that because so that their expectations are in check with how things are running in the market and what is be anticipated for time frames, right? So they don't go, oh my gosh, we had an open house and our house didn't sell, we didn't get any offers. Well, it's just not the market right now.
Yeah, the holding offers,
Yeah. You still
strategy
seeing that?
is still out there.
Hmm.
It's been very popular, or let's say commonly used in Durham region
Hmm.
in the last number of years, but it's not the same level of competition as there was before.
Hmm.
Homes are very sensitive to pricing right now. If
Hmm.
they're going to sit on the market longer, if they're overpriced, and
Yeah, you
buyers
got to
aren't
price
going to
it
wait,
right.
right? Buyers aren't going to be window shopping as much as they did before, just
Yeah,
trying to get in on anything they could.
right.
They're really taking their time to find the right home, and so I certainly suggest that any of our clients that are going to be selling is that they do the prep work in advance and make sure everything, remove all those, you can call them blemishes on a home if you need to give it touch up a paint or what have you. I mean, we can go through all those processes in another conversation, but they're sensitive to pricing. It's sensitive to presentation and how it presents to the market, and that
Yeah.
means staging. That means all your proper patch and prep that you need to do in the house and decluttering and all those important factors that help homes sell for the most that they can.
Mhm.
The market's changing, and people need to understand that the cream rises to the top, and if that's where they want to be with their value of their home, they've got to put
I
in the
like that
work and
one.
the time to get those numbers.
Awesome.
So. I think that's all I wanted to cover off here today, Alex. I know we've
Great
had
overview.
lots happening here the last few weeks. And obviously we've got another rate increase coming in the end of
Right.
October. So there's
Yep.
more to discuss, more to understand, and more to learn. So
We'll be back on and we'll touch base on that to see where rates are and keep our clients informed. But any questions in the meantime, feel in regards to home financing, feel free to reach out to myself anytime.
absolutely. Well, folks, thanks again for joining us today. Alex's contact information will be at the end of this video, as will mine. If you have any questions, certainly reach out to us directly, and we'll be there for you. So
Awesome.
until
Thanks, Luke.
Until next time, have yourselves a great day. Bye for now.